Be Wealthy and Smart, episode 1350.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the stock market, that is the S&P 500 and NASDAQ at all-time highs. Now, I waited to do the podcast until the inflation numbers came out this morning because that's how important those numbers were to see. We had the Consumer Price Index, or CPI numbers, come out this morning for April, and that gave us the most recent picture of what's going on with inflation. The April numbers showed that inflation eased slightly in April, which provides a bit of relief for consumers while still holding above the levels that would suggest that the Fed can cut interest rates. The Consumer Price Index is a broad measure of how much goods and services cost at the cash register, and it increased 0.3% from March, which was slightly below the Dow Jones estimate of 0.4%. On an annual basis, the CPI increased 3.4%, which was in line with expectations. But that puts inflation above the 2% range that the Fed is looking for. The Fed wants to get inflation below 3%, so the fact that we're still above 3% means no interest rate cuts right now. With inflation staying stubbornly high, what the market is pricing in is an interest rate cut in September. We do have half of the equation in the right place, and that is the jobs market. The jobs market is weakening and is in the right area that the Fed wants to see it. However, inflation is remaining stubbornly high, and that is keeping the Fed from being able to cut interest rates. When we look at the Consumer Price Index and what is keeping it high, it was driven heavily by rises in both shelter and energy. Shelter costs increased 0.4% for the month and were up 5.5% from a year ago. Now that's way above the 2% level that the Fed wants to see for the general inflation amount. Energy rose 1.1% for the month and was up 2.6% on an annual basis. Food was flat for the month and up 2.2% for the year. Used and new vehicle prices, which rose a lot during the pandemic, both declined, falling 1.4% for the month and 0.4% for the year. Also showing gains for the month, including apparel up 1.2%, transportation services up 0.9%, and medical care services up 0.4%. For transportation services, that took an annual increase up to 11.2%. And services excluding energy, which is a key point for policymakers, increased 0.4% on the month and were up 5.3% on the year. When you look at workers' earnings, they fell 0.2% on the month when adjusted for inflation, and on a 12-month basis, real earnings rose just 0.5%. So again, salaries and wages are not keeping up with general inflation. So basically, policymakers, the Fed, has said that they need more evidence that inflation is on a sustainable path back to their 2% goal before agreeing to lower rates. Traders are pricing in a rate cut in September. And the reason why they may be thinking that could happen is because everything we've talked about today is on a backward-looking basis, and it's also got a 1.5-year lag. So since raising interest rates takes about a year and a half to show any improvement in inflation, we're right at that point where we should start to see inflation drop off due to interest rates having risen. But we haven't really seen that in any big way yet, and it could come in and surprise us at any time, where inflation could drop more sharply than expected. That's a possibility that's out there. I'm not saying it's going to happen, but it is definitely within the realm of possibility. Just because we've been waiting for the interest rate hikes to really kick in, and it does take about 1.5 to 2 years to show up. So we're right in that time frame where we could see a dramatic reduction in inflation. Now, if the Fed does cut interest rates in September, that would be the first rate cut since the pandemic in 2020. We'll keep the possibility there that we could see a surprising drop in inflation at any time, or we could continue to see the gradual reduction of inflation that we're continuing to see in the last couple of years. But the good news is inflation has been trending lower. It's just sticking a little bit more above that 2% rate that the Fed wants to see. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.